Welcome to Talk Tickers. We're your direct line, aiming to cut through the jargon and really get into what happened on the latest earnings calls. Today, we are plunging right into Venus Concept's Q2 2025 earnings call. This was a pretty significant one, actually. It happened August 14th, 2025. The press release, that hit the wires around 4:05 p.m. Eastern, and then the call itself kicked off about an hour later, 5 p.m. So our mission for this deep dive, let's unpack the numbers. Let's dissect the strategic shifts management is trying to make, and maybe analyze the market's reaction, which, well, let's just say it was cautious, definitely cautious. Okay, so first things first, the snapshot. Q2 2025 results. Venus Concept reported revenue of $15.7 million. Now that number, it's interesting, it's actually a 5% decrease compared to last year over year, but it was up 15% from Q1, so sequential growth, and it actually beat some of the consensus estimates out there. Okay, profitability. GAAP EPS, that's generally accepted accounting principles, earnings per share, came in at negative $8.03, which honestly was a bit of a mixed bag against what different analysts were expecting.
And here's where things get, well, kind of tough. Gross margin. It took a big hit, plunged down to 60.1%. Compare that to 71.5% in Q2 of 2024. That's a significant drop.
A really big drop. Ouch.
Yeah. And adjusted EBITDA, earnings before interest, taxes, depreciation, amortization, that loss widened. It went to negative $8.8 million. Last year, same quarter, it was negative $4.1 million. So more than double the loss.
Not the direction you want to see that going.
Definitely not.
Yeah.
Operating loss for the quarter was negative $9.0 million. And then looking at the balance sheet as of June 30th, 2025, cash and equivalents, just $4.9 million.
Yeah, okay.
Against total debt obligations of around $34.3 million.
So $4.9 million cash, $34.3 million debt. That definitely paints a picture. And you laid out the numbers perfectly. What really jumped out immediately was, like you said, that market reaction. Management tried to put a positive spin on things, especially that sequential revenue bump.
Right, the quarter-over-quarter growth.
Exactly. But the market just seemed laser focused on the challenges. I mean, the trading volume spiked the next day. A lot of activity, investors clearly paying attention. And the stock, it went down. That really hammered home this very cautious feeling. Like investors were saying, okay, nice try, but we see the problems.
Totally. The headline numbers, they gave you that mixed signal, right?
Yeah.
But yeah, the devil's in the details, always. So let's really unpack that revenue story for Venus Concept. Because like we said, overall down year over year, but the geography is fascinating. U.S. revenue actually increased 5% year over year.
Okay, so strength domestically.
Yeah, and that growth, it was mostly fueled by a big jump, 23% increase in cash system sales. And those cash sales are now 65% of their total U.S. system sales. Last year was 58%.
That's a positive shift, definitely. Moving towards cash is generally seen as higher quality revenue, less financing risk involved.
Exactly. Shows maybe some strategic discipline there. But then you flip the coin. International revenue, down 18% year over year. Big drop.
Oof. Yeah, that hurts. Still, overall, if you look at total systems and subscription revenue combined, that did show about 20% growth. So
it really is a tale of two markets, like you said earlier. U.S. holding up, even growing in key areas, while international is struggling.
Precisely.
But that shift to U.S. cash sales, while good, it can't really mask the core issue, which is that gross margin compression. Going from over 71% down to 60.1% in a year, that's not just noise. That's telling you the fundamental profitability of each sale is getting squeezed.
Right.
Hard.
So what's driving that squeeze? What did management say?
Well, they pointed to a few things. First, just general customer uncertainty. Economic worries, stability concerns. That makes clinics hesitant to buy big capital equipment. Plus, third-party lenders are getting tighter with financing.
Makes sense. Harder to get loans for these expensive machines.
Exactly. Then there's that drop in international revenue we mentioned. Macroeconomic headwinds, sure, but also they deliberately exited some unprofitable direct markets overseas.
Okay, so some of that international decline was strategic. Some of it, yes, but then there's this other layer, kind of a geopolitical wild card. Supply disruptions. Apparently, the conflict between Israel and Iran impacted one of their contract manufacturers in Israel.
Okay. Real-world events hitting the supply chain.
Right. And that led to what they call an adverse sales mix because they had shortages of some of their higher margin devices. Plus, the cost of making the devices they could get had to be spread over lower volumes, pushing up cost of goods sold.
So a perfect storm, almost economic jitters, financing issues, strategic exits, and supply chain hits.
Pretty much. It just highlights how tough the environment is for this kind of capital equipment right now, especially things seen as discretionary, like aesthetics. High interest rates don't help either. It's a tricky spot.
Yeah, it really is. And that kind of hit to profitability, it puts enormous pressure on the company's finances. Which brings us back to that balance sheet. The big question on everyone's mind must be, how durable is it? That $4.9 million in cash against $34.3 million in debt. I mean, that sounds razor thin.
It is thin, no doubt about it.
So what are they actively doing? Are they making moves to, shore that up, to extend that runway?
They are, and you have to give them credit for being active here, even if the situation is tough. They've made some very specific financial moves. First, they did a $6.5 million debt-to-equity exchange. This was with Madryn Asset Management Affiliates. It was actually part of a larger deal, a $17.5 million conversion of these subordinated convertible notes they had into preferred stock.
Okay, so swapping debt for equity, what's the main benefit there? Less immediate cash pressure.
Exactly. It reduces the amount of debt they have to pay back in cash, at least in the near term, and improves their leverage ratios on paper, takes some pressure off. On top of that, they raised about $3.9 million through what are called at-the-market equity financings, or ATMs.
Right, where they sell small amounts of stock directly into the market over time.
Precisely. They did several of these during Q2. So yes, they are actively working to bring in cash and restructure their obligations. It's about improving leverage and, critically, getting more liquidity.
It's interesting. From the outside, you see these moves, debt conversions, equity raises. Is this a sign of, smart long-term planning? Or is it more of a scramble, given how tight that cash looks?
That's the million-dollar question, isn't it? I mean, you could argue both ways. On one hand, yeah, they're taking action. They're not just sitting there. They're converting debt, raising cash. Those are necessary steps to survive and stabilize.
Buys them time.
Buys them time, exactly. But on the other hand, the need to make these moves so urgently definitely highlights the intense financial pressure they're under. So it's probably a bit of both. Necessary survival tactics that they hope will pave the way for a stronger future. Which actually leads us nicely into a really big strategic move they announced back in June.
Yes, let's pivot to that. Away from the immediate financial engineering towards the bigger picture strategy. In June, Venus Concept announced a definitive agreement to sell its Venus hair business.
This is a big one.
Yeah, selling it to MHG Meta Health Group for $20 million. Cash.
$20 million cash is significant given that balance sheet we just discussed.
Hugely significant, and the rationale they gave. Pretty straightforward. They want to strengthen the core Venus Concept business by focusing purely on medical aesthetics. The idea is this focus will help improve revenue growth, lower their operating expenses, and hopefully accelerate their path to actually becoming profitable.
Makes sense. Shedding a non-core asset to double down on your main business. Classic strategy.
And MHG, the buyer. They were set up in 2021 based in Seoul, South Korea. They're a holding company involved in aesthetics, but also investing in things like medical AI and robotics. So seems like a potentially synergistic buyer.
Interesting.
The sale is expected to close sometime in Q3 2025, assuming all the conditions are met. This feels like a real focusing moment for them, doesn't it? A chance to really lean into their strengths.
It absolutely does. And that $20 million cash infusion, if it closes as planned, is critical. It changes that balance sheet picture considerably. Beyond just selling the hair business, management also gave some hints about what's next, product-wise.
Oh, yeah.
They mentioned plans to launch a new body device by early 2026. So, new product pipeline potential there. And they did something else interesting. They specifically talked about the whole GLP-1 trend.
The weight loss drugs. Ozempic, Wegovy, that whole phenomenon.
Exactly. It's a massive trend. And Venus Concept sees an opportunity there. They want to highlight how their body technology, specifically things like skin tightening, can be complementary for people losing a lot of weight on these medications.
That's actually pretty smart, addressing a potential side effect or consequence of a huge trend.
Right. It shows they're thinking about the broader market, the patient journey. It's not just about the device itself, but how it fits into these larger health and wellness trends. It's a potentially clever way to position existing tech for a new, emerging need, especially when facing headwinds elsewhere.
Yeah. Definitely something to watch. But, for all this talk about strategy, new products, the GLP-1 angle, there was one thing glaringly missing from the call that probably raised a few eyebrows.
Let me guess.
Guidance. Bingo. No full year 2025 financial guidance provided. What does that signal to you? Usually companies try to give some kind of outlook.
Yeah, the lack of guidance is always notable. And management, to their credit, didn't really hide the reasons. They mentioned ongoing, active talks with their lenders and investors. That tells you things are still being negotiated.
Okay, so financing uncertainty.
Right. They also mentioned they're still evaluating strategic alternatives to maximize shareholder value. That's often code for potentially bigger moves, maybe even considering a sale of the whole company or significant restructuring or more financing.
Why uncertainty?
Exactly. And finally, they cited the current market conditions, specifically those trade disruptions we talked about impacting supply chains. So basically, they're saying things are too fluid, too uncertain right now to confidently put numbers out there for the full year.
A clear signal that they're navigating some pretty choppy waters still.
Absolutely. It tells us they're in a period of significant flux and negotiation. But they did reiterate their focus. They said they're working hard on reducing cash burn, managing costs tightly, while still making, quote, targeted investments for the long term.
It sounds like a real tightrope walk, trying to survive day to day while still planning for the future.
That's a perfect way to put it, a tightrope walk.
So let's zoom out for a second. How does Venus Concept's situation compare to the broader industry? Is everyone in the aesthetic equipment space struggling like this?
Well, the whole sector is definitely feeling some pressure. Credit is tighter. There's general economic uncertainty affecting big purchases. That's industry-wide. But when you look at performance, it's a different story. If you take an ETF like IHI, which tracks medical device companies, including some in aesthetics, it's actually had positive returns, like plus 12.3% over the past year.
Okay, so the sector overall isn't tanking.
No, but Venus Concept's stock over that same year, down 63.1%.
Wow, that is a stark contrast.
It really underscores that while there are broad sector pressures, Venus Concept is dealing with some very specific company-level challenges that are weighing much more heavily on them. And that market reaction after the call stock down over 5% on higher volume, it just shows that gap, right? Management trying to sound constructive, focusing on sequential growth, the hair sale, while investors are clearly still hung up on the margin deterioration, the EBITDA losses, and that looming financing overhang, the market is basically saying, prove it. Show us the path to sustainable profit and a clear runway.
Right. So for you, the listener, maybe you're holding this stock, maybe you're just watching the sector. What are the key things to keep an eye on next? What are the potential catalysts?
Okay. Few key things in the near term. Number one, absolutely critical. The closure of that $20 million Venus hair asset sale that's expected sometime this quarter, Q3. Getting that cash in the door is priority number one for their liquidity. That's the big one.
Makes sense. What else?
We need updates on their financing situation. Are they getting any bridge loans? Are they doing more liability management, like those debt swaps? Any news there is important. Then operationally, you want to watch for momentum. Are those product and order trends picking up in the second half of the year? Especially those U.S. cash systems, is that growth continuing?
Keep an eye on the core business performance.
Exactly. And of course, the next earnings call, probably around mid-November, that'll be the next big official update. But bottom line, they need to show they can stabilize those margins and give investors a much clearer picture of their cash runway. That's what's needed to bridge this gap between management's outlook and how the market is feeling.
Got it. Okay, let's shift gears now to our not financial advice segment. And we always say this, but it's crucial. This is purely for informational and discussion purposes. Think of these as thought experiments, maybe ideas for further research. But please, always, always do your own thorough homework before making any investment decisions. This is not a recommendation to buy or sell anything.
Absolutely. So acknowledging everything we've discussed, the tight cash, the margin pressure, the debt, that $20 million from the Venus hair sale isn't just strategic, it's basically a lifeline right now.
Yeah, seems unavoidable to see it that way.
Right. So the market knows this sale is supposed to happen in Q3. But what if? What if the market is maybe a little too skeptical about it closing smoothly or quickly? Here's a very tactical, speculative idea again, not advice. Could you maybe play for a pre-close pup?
Okay, what does that mean?
It means thinking, what if definitive news of the sale closing hits the wires before everyone expects it? Like an unexpected 8K filing or a press release saying, deal closed, cash received, well before the November earnings call. If that happens, you could see a sharp, maybe short-lived jump in the stock price. Just pure relief that the immediate liquidity crisis is averted.
A relief rally based on the timing of the news.
Exactly. It's a bet purely on that event catalyst hitting sooner than priced in. Now, finding the right options contract would be tricky, liquidity might be thin, but that's the idea, betting on the news timing.
Interesting. Okay, what about a counter perspective? Or maybe a hedge?
Well, think about that lack of guidance. Management explicitly mentioned ongoing evaluation of strategic alternatives and trade disruptions. That screams uncertainty, right?
Deep uncertainty, yeah.
So there's a real risk of more bumps in the road. Maybe operations don't improve as fast as hoped. Maybe they need another capital raise even after the hair sale cash comes in, which could be dilutive to existing shareholders.
Right, the $20 million might not be enough long term.
Possibly. So if you're worried about that continued uncertainty or potential downside surprises, maybe you think about a structure like a guidance gap collar.
A collar trade, explain that simply.
Basically, you buy some protection against the stock falling further, say, buying out of the money put options that expire maybe late this year or early next. And to help pay for those puts, you simultaneously sell some call options further out of the money with the same expiration date.
So you limit your downside, but also cap your potential upside.
Exactly. It provides a buffer if things go wrong operationally or they need more cash, but still lets you participate in some upside if the story genuinely turns positive. It's a way to navigate that volatility when the forward path is just so unclear, acknowledges the risk.
Okay, two very different ways to think about the situation, depending on your view and risk tolerance. Interesting stuff. So let's try to wrap this up. Venus Concepts Q2 2025. We saw that sequential revenue growth, especially strong in U.S. cash systems, that's the positive. But it was really overshadowed, wasn't it, by that significant gross margin compression and the wider adjusted EBITDA loss.
Yeah, the profitability metrics definitely took center stage in a negative way.
And strategically, they're making big moves. That $20 million Venus hair sale is crucial, alongside those ongoing capital raises, all aimed at fixing the balance sheet and focusing on the core aesthetics business.
Trying to get leaner and more focused, definitely.
But that decision to hold back on full-year guidance, combined with the macro headwinds, the supply chain issues, it just signals that this operational turnaround, it's still very much a work in progress.
Absolutely. The market's cautious reaction reflects that uncertainty about getting back to sustained profit and having enough capital runway.
So, as always, remember, investing involves risk. Everything we discussed today is for educational purposes. You absolutely must do your own thorough due diligence before making any decisions.
Couldn't say it better myself.
Thank you for joining us on this Talk Tickers deep dive into Venus Concepts' latest earnings. It's definitely a story of strategic pivots, financial pressures, and navigating some very challenging waters. The big question really remains: can management successfully execute these maneuvers and translate them into sustainable results and renewed investor confidence? We'd love to hear your thoughts. Feel free to reach out.